If you look at the gold to silver ratio, something I track very closely, going back to March of 2020, that ratio had reached an extreme that's never been seen before, about 130 to 1. And then very quickly, that ratio compressed down to about 65 to 1 in August of last year. So that ratio had moved really far, really fast. So I think what we're seeing here is just kind of a little bit of a backing and filling in that ratio, where we said last I checked somewhere around 75 to 1 or so. But I do think that silver will continue to move in the same direction as gold and outperform gold as the bull market resumes. You can look at mining output, and roughly it's roughly a 9 to 1 ratio, where silver is pulled out of the ground roughly 9 times in greater abundance than gold. So that's one ratio you could look at. You could look at a long-term historical ratio, and that's roughly 15 to 1. And 15 to 1 is interesting to me because that's typically where bull markets peak. So back in 1980, at the peak of that bull run, the price of gold was roughly 15 times that of silver. So I think in the fullness of time, in the next few years, we're very likely to see that ratio revisited 15 to 1. Of course, that's going to take some time because we're sitting at roughly 75 to 1 now. But that would mean that silver outperforms gold by roughly a factor of 5 over the next few years. And I think that's a very logical path forward.
A decline of the gold-silver ratio down to 15 to 1 could imply one of two things. Either silver skyrockets to the moon or gold collapses. Which is more likely?
Well, I don't think gold is going to collapse. I think we've already seen most of the selling here. I'm not necessarily calling a bottom, but I think we're much closer to a bottom than a top in the metals. And like I said, I think silver is going to outperform going forward, but I also think gold will do very well. Well, for the silver price, you mentioned industrial demand. That's a tailwind. Industrial uses for silver are only increasing, especially with electric vehicles, solar panels, you name it. There's a lot of things, industrial uses for silver. But that's not my primary investment thesis, and that's the primary investment thesis is based on retail investment demand. If just a small number of general investors say, hey, I want to have exposure to just some silver, there's just not simply enough at today's prices. And historically, that's what drives, the kind of prices silver investors are looking for, north of $50. Well, like I said, the industrial demand, that's a tailwind. But what we need to really see the price move is more generalist investors come in, retail demand. And we just haven't quite seen that yet. We do have the Wall Street silver crowd, and there's a constant bid for silver, physical silver. But we're not seeing the generalist investors shift en masse. They're still into, what I call the bubble assets, general equities and things like that. But at some point, they're going to shift. Value investors are going to shift over towards silver. And that's when we're going to see the really explosive moves higher, in my opinion. You're not seeing silver talked about on Fox Business or CNBC or anything like that. People are going they're chasing momentum. And right now that's in stocks, tech stocks, and other assets. But at some point, that's going to shift. And one metric I like to track is the Dow gold ratio and the Dow to silver ratio. And we need to see the metals start to outperform stocks. And as that starts to happen, that's going to attract a lot of those generalist investors to take their chips off the table in these overvalued assets and cycle into things like silver and uranium and gold. So we're seeing the banks starting to cover their short positions, and we see smart money posturing for or positioning for the next turn in silver. And I think that's going to be a big catalyst too when the banks start buying. If you ask them, they'll say it's to hedge existing longs and for their clients. But I'm not one of these people who's blames every downtick on manipulation, but I think there's a very good case to be made that silver is likely the most manipulated metal on the planet.
Mm-hmm. What do you mean by that? How is it being manipulated?
Well, on the COMEX, you can see that large sell orders come through at very illiquid times, and that's not the price. That's not the behavior of traders who would be looking to maximize profits.
Okay, so can you elaborate on that? They're doing what exactly?
So let's see. I'm trying to think of the most recent example. Like I said, I don't blame every downtick on manipulation.
I understand.
And I didn't intend to open up a can of worms, but if you go back, let's see, a few weeks ago, there was a really sharp sell-off in gold, something like $80, $90. I can't remember the exact date. And that happened at a very illiquid trading time. In the middle of the night before the New York traders are active. If you're a trader looking to get rid of your long positions, that's not how you would get rid of those. You would want to sell gradually into strength or into more liquid markets. That's just one example of how banks can potentially manipulate the paper price lower. Well, let's use that analogy. Let's say you owned a penny stock, you wanted to sell it, and it trades on very thin volume. I mean, are you going to try and sell that in off market hours when you know there's no buyers there? No, you're going to scale out slowly in the most liquid hours. You're not just going to dump it all at once because you know you're not going to get the best price. And I think that's a great analogy for what we see in the silver market frequently.
Okay.
Yeah, and saying stale, I think that's putting it kindly. Let's just say it's been terrible. It's been just flat out ugly. I mean, if you told me back in August of 2020 that we'd be here in September of 2021 with a 21 handle in silver, most people wouldn't believe you. Almost everything is going up except for, silver and the things that should be going up in this environment. So it's extremely frustrating. And I sympathize with that. But, I'm a contrarian investor. And as a contrarian investor, I like this price action because it gives us time to accumulate. It gives our members a time to accumulate at much more favorable prices. And, if history is any guide, this is not going to last. Silver and gold have a long track record of thriving and prospering in this exact environment that we're seeing right now. Sure, there are still some short-term headwinds as the Fed continues to talk about taper, normalization of interest rates in 2022. Those are short-term headwinds, but from a longer, bigger term or macro perspective, we know that's not sustainable. Silver and gold always do a full accounting for the expansion of debt-based fiat currency, and I don't think this time will be any different. First of all, I think people should decide, hey, I'm new to this space. How much of my portfolio do I want to even allocate to this sector? That's the first question. And then from there, have a plan to accumulate. There's no right or wrong answer, but you could dollar cost average. You could simply wait for a technical reversal. There's nothing wrong with that. Or you could scale in on weakness. But having a plan is the most important thing. But I certainly wouldn't just, hey, I'm new to the sector, put all my money in right now. I don't think that's the wisest way to do it. For owning physical metal stored outside of the banking system first, I like to say build your moat before your castle. I think of physical metals as my defense, and then the mining stocks as my offense. And there's different ways to invest in the mining sector. Some are a little bit more high risk, high reward, if you know what you're doing or you have some guidance. But a simple way to do it is just to buy the ETF. That's for someone who doesn't want to do any due diligence on individual stocks. There's some okay ETFs out there, but a well-selected basket of individual mining stocks would outperform, in my opinion. Silver still hasn't even surpassed its 1980 high. And I think that's the only commodity on planet Earth that you can say that about. Silver reached about $50 in 1980, and here we are at 21. So not only are we not above that 1980 high, we're less than half. So, I mean, unless this is some kind of anomaly where this time is different, silver's got much more upside and very little downside compared to any other asset than I can think of. But let's just say the stock market, I think, is due for a 20% pullback. A lot of people might call that a crash. I think if we saw a 20% pullback in the stock market, especially if it happened in a short period of time, that's going to get rid of any taper talk. They're going to stop talking about tightening interest rates over in 2022, and they would probably reverse course and have more monetary stimulus. Just a 20% pullback in stock market. That could be a significant catalyst for the metals. So that's one potential scenario I'm looking at here over the intermediate term.